Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market had a historic decline of 17% off of its top a week ago, and then it turned into historic volatility. The Dow moved 1,000 points a day back and forth. 3 days we saw that this week. And the news still was all about COVID-19, but then you add in the Fed actions and the results of the Democratic primary, and you've had a lot of reason for some big movements. Monday saw the biggest Dow point rally in history with a 350-point gain, and that came as there was hope that the G7 stimulus package would be very effective. That turned out to not be very appealing later on. There was speculation of a special rate cut by the Fed, which proved to be correct, and the bottom pickers were in force. Tuesday, the stock market moved down sharply as that G7 language disappointed in their statement, and the Fed came out with a half a point emergency rate cut. And stocks moved up briefly, moving up to our target on the upside, and then turned to the downside in a very sharp way. Wednesday, well, Biden had a very strong showing in the primaries, and healthcare stocks exploded to the upside in relief that they would not have a socialist President Sanders that would decimate the healthcare industry. The Dow gains 1,100 points that day, just an absolute huge move again, with a ton of last hour buying coming in because, of course, the bulls out there can't possibly miss the next big upside move. But then Thursday, well, things changed again. There was news that came out overnight that in Wuhan, China, the cases of COVID-19 surged again, where they thought that was calming down there, which that was the core, the very beginning of this epidemic or pandemic, whatever you want to call it. And Thursday, before the market, Apple warned that there would be a shortage of parts for iPhone replacements. And California then declared a state of emergency as one person sadly died from the disease. Factory orders came out down for the sixth straight month, and the Dow falls another 1,000 points. Wow, what a week. Friday, the news comes out that the coronavirus cases had reached 100,000 worldwide. There was hope that OPEC would cut to try to stabilize their oil prices, so production cuts was what they had in mind, and then Russia said no. Oil moved down a quick 5%, and as I'm doing this recording now, it's down 8% in nearly a total collapse in the oil market. Just an amazing thing is the fear is that more and more economic slowdown ahead of us will continue to lower demand. U.S. futures were down 100 points pre-opening on Friday, and the investors really panicking. And then when the employment numbers came out, which were relatively strong, much stronger than expected, payrolls, they created 273,000, unemployment rate at 3.5%, and all of that looks strong, but it seems, well, ridiculous. Everything is good all of a sudden. Well, stocks cut their losses in half, but now are fading again here at the midday period. Those numbers, part of those numbers were, in my opinion, very erroneous because they talked about a big increase in restaurants, where restaurants have to be cutting back pretty severely because not a lot of people are going to want to be going if this COVID-19 gets any worse. And 30-year bonds, absolutely like I have never seen. They were up 6 points during the day. Now, as I'm recording, they're up 5.5 points, and we have unbelievable record yield lows at this point. So there is so much going on panic-wise in these markets. And while the stock market is horribly bad, and we have many groups moving to the downside, energies, transports, travels, the airline stocks, cruise lines, hotels, booking companies, they're all moving down very sharply as slowdown in those areas seem very apparent. Well, financial stocks, which are a very key, look like a top. And we're going to look at a couple of charts in here, multiple time frames that I want you to see in the XLF. You know, my work is done as our core analytical work is in cycle analysis, and we look at multiple time frames, and that's really a key to us. And I want you to look at the XLF. So there's your daily chart right over there. And you can see one of the key things is getting under these levels, and this top that formed in the breakdown, it is now in collapse mode. It made the bottom here where it was supposed to, rallied and moved down. We're now looking for this decline to continue into the end of March. You can see where that low is due right over there. And you can see when I switch over to the weekly chart right over here, this breakdown under this key level right over here, well, that looks like a major top in the financials. We're going to look for a bounce. These resistance zones are now falling as we move down through here. So this low right over here, end of March, the same thing that we talked about on the daily chart. It could easily get much, much lower, and here financials absolutely collapsing. There's your weekly chart right over there. There's your daily chart right over here, all pointing to end of March for this wave of the decline to end. And that is some pretty severe weakness that we see there in the XLF. That leads, in our opinion, the bear market that is moving to the downside. The U.S. Fed has now joined the idiocy of Japan. With 11 years of this extraordinarily low rates, they have put a patch on the cancer, just as the Bank of Japan had done, and now the banks in Japan are in permanent life support. And that's what's happening here in the U.S. There is huge stress on the repo markets as they keep pouring money in to do that, and that's because the dealers are so overwhelmed with the U.S. debt, with all of the paper that's coming in there. And so the U.S. banks and the U.S. economy in the same place as Japan, buried in debt. We did not learn the lesson. Now the Fed has lost control, and they must cut again. Look for the meeting coming up later in March for them to do another rate cut. It's probably going to be another 0.5%. Maybe they go down to 0.75. And here we are, this Fed so incredibly invasive into this economy. And now they have no choice. I mean, they can't really cut a whole lot more, and we're in crisis, and all they have left is print. Coming more is QE. You should watch our big picture analysis on gold and the dollar we did on Thursday, and maybe gold is the only place to go. Now, gold is flopping around a lot today, but it sure looks like it's going to move to higher prices in here. The government should have really gotten out of the way a long time ago. The smartest thing they could do right now, which they're not going to do because they're not smart, because they follow MMT or they follow other things that are massively invasive into our economy, the fastest thing they could do is let the markets fall. Let the stock market go to where it's going to go. Let the interest rates just go to where they're going to go and get out of the frickin' way. And then we can have some real organic lows in place, and when the markets stabilize, you'll know that something really good has happened, that something has happened in a way that the markets can understand, investors can understand. Right now we're in this dark cloud that is created. I'm going to go from this XLF chart that I showed you right over here, and I'm going to move into one other chart. I'm going to look at HYG and look at that. So this is what's happening to high yield corporates. a collapse. And this historically, when this happens, you end up making major market tops. This dashed line right over here is known as a VTL, a valid trend line coming off of cycles. We have this big break. This is very likely to continue down into early April. And this HYG is a sign of huge stress. And when you see the action that's going on in the Russell absolutely getting hammered, that's because of all of those companies in there that, well, they've been on life support by the government, money pouring in. But as no matter how cheaply they can borrow money in that third tier, low end of the economy, they are going to be massively strapped as the economy slows down. I don't know how they're going to survive a recession. And I don't think the government can do any more of this corporate bailout stuff. So there is a lot of stress out there in the economy and everything that we look at in here. And they should just be letting everything just go and settle down. But they're not going to do that, We talked about a decline in the market of some 8 to 12% into the summer. Well, it's way worse than that, and it's going to be way worse than that. We're now looking for much lower lows out into the summertime. We'll probably get some rebounds as the market should be making a tiny bottom in here. But there is lots and lots of trouble. Stocks for the week, huge swings, and the change relatively small. Unbelievable when you look at that chart. 1,000-point moves in the Dow, and we're relatively unchanged for the week right now. Bond market, though, explodes with 9-10-point gains in the 30-year bonds. The TYX, the 30-year, gets down to 1.27. Unbelievable. The TNX gets down to 0.69. If this isn't crisis mode, I don't know what is. And now the bond market is forcing the Fed's hand. The Fed has lost control of this completely, and they should just really revamp the Fed. I got some great ideas about that, if only anybody would really ask me. And the gold market, well, that had been up about 85 points. It's now up about 70 points on the week. Silver up about 45 cents. The silver market much weaker. Look at my big picture analysis. I talk about the metals also in that one I recorded Thursday. And silver, platinum, copper, they don't look good at all. Gold looks the best one. Dollar, a major top. A huge 2% decline in the dollar this week. That is very, very significant. And the oil market, well, that's losing $2 on the week. It was way up earlier as it tried to rebound on hopes that OPEC would be able to do something, but OPEC, a huge failure regarding trying to do better as far as that goes. Well, the oil prices in collapse mode here, trading $42. Absolutely incredible. And you still could get lower than that. We've been looking for an intermediate bottom in here. I'll show you that on the short-term view coming up. Follow me on Twitter at askSlim. Become a YouTube subscriber. We put lots of things out there now, including this show. And if you're watching this show on YouTube, make sure you give me a thumbs up, especially if you like what you see. If you don't like it, well, and you give me a thumbs down, make sure you tell me what you didn't like so I can be better and our team could be better, because we want that more than anything. We want you to love what we do and really become members. Talk about becoming members. What I want to tell you right now is about the end of our trial coming up here. Beat these price increases for $3.9. Prices going up, they have to, because of all of the amazing technology we've built into all of our content. Become a level 1, and that trial includes the Slimulator Momentum Tracker, which I'm going to use for some research in just a moment. The SIR, Stock Index Report Weekly Outlook. This is all for people or longer-term holders, and the Spider ETF Review. That's level 1 trials. You can get half-price trials and more. Level 2 trial includes everything I just told you in level 1, plus the SIR daily snapshot and live feed. We do a fantastic job giving you charts and key numbers for index traders, and you will love that. That also includes our library of nearly 500 videos of all of my experience of 45 years trading, 8 categories in that library. You will never have an opportunity to learn so much in there. Level 2 trial, and that you can get that for half price for a month, and we have some other things in there as far as that goes. Level 3 trial includes everything in level 1 and 2, plus our Slimulator ranking system. That is the 84 best traded symbols with unbelievable information you'll get in there, including charts, our static charts that I do. That's 168 charts included in there on the 84 best symbols. Plus, you get our daily trade ideas, and you can email me with questions regarding that. And level 4 trial, everything included in 1, 2, and 3 plus. You will get my charts on your Thinkorswim platform. All of those available in our 1-month trials. And please do write Matt at askSlim.com. You can see that, M-A-T-T, at askSlim.com for those trial links. Unbelievable. All right, so now what I want to do is I want to talk a little bit about the condition of the market using the Slimulator Momentum Tracker. I'm going to push that up in here for you to see. And there is the Momentum Tracker. Incredible piece of technology that we have built in here. I have this right now just set on Apple in the single symbol mode that you can see right there. We have a scan mode that you can do a lot of scans, but what I'm going to do now is I'm going to show you the condition of 8 different sectors of the market so you can get a great idea. I'm going to go in here and you can see we have the S&P 500, the NASDAQ, but what I want to do is I want to look at those spider selects, XLE, XLP, XLV, XLC, XLI, XLK, XLY, XLF. I'm going to show you a bunch of those so you can get a good idea of the conditions of these things. And I'm going to go through here quickly, but you'll get a great idea in here. Let's choose the energy, XLE. You can see in there that we now have a lot of information. You see this right over here as I point to this pie chart at that point. I have this set to directional bias. This is our proprietary formula in here, and we built the algorithm in here. And look at here, 89% of the energies right there are in a condition that is negative, a directional bias that is negative. If I click on LT, the long term, you'll see all of these energy stocks that mostly are in intermediate term, long term, and short term, all negative conditions. And look at the directional bias as I go down here. Very bearish, very bearish, very bearish. It's been this way for a long period of time, and investors would have really seen the horrible condition that we have had here in the energy stocks. You would have been able to duck out of the way of a lot of trouble in here, or maybe even make short sides. Let's move over here to the next one. So that was XLE. Let's go to consumer staples. Now we know consumer staples tend to be a place where they hide, investors hide. 38% have a directional bias in there that are negative, and 53% neutral, only 9% positive. And you can see in here how these set up, all in pretty bad shape. Now look at what I came down here. Clorox, Campbell's Soup, Kroger, those are all green all the way across, and that's where investors are hiding. So you could have parked your money in there and gotten a good sense for stocks that were in good shape. You look at those charts, you'll see they have done relatively well. If you look here at the next one, we're going to go down from the consumer staples to healthcare. There was some news out there this week that showed that some of the healthcare stocks got pumped because of the Biden good showing in the primary, but you can still see a lot of negative stocks in here. They are 62% neutral, 11% positive, and only 26% negative right there. Take a look as we go down here through the stocks. If you want to see which ones turn positive, we're going to get to the positive ones right over here. And there isn't many of them. None of them really are long-term positive, except that one right there. So I clicked on long-term positive, and WellCare Health, you can see that all green all the way across, and that is slightly bullish to, well, wrong one right over there. That one is very bullish right there. So that was probably the best one in here. UNC, United Healthcare, which had a big upturn at the end of the week, still wasn't enough to turn this positive. So it's slightly bullish to neutral in there that we're looking at. So that is a look at healthcare. I'm just going to go through these really quickly so you can get a good sense. You can see my focus list of 84 stocks and futures in there. Let's take a look here at the communications. This is a relatively new one. Look at these stocks. You can see how negative they are. 52% negative, 41% of them are neutral, and 7% only are bullish. And you can see Discovery, very bearish. Fox, very bearish. Omnicor, very bearish. All of those, you can see that. Just tons of great information that you get in there. And the most positive that we see in here, well, people are going to stay home and watch videos. So look at Netflix right there. It is bullish. Amazing how this just absolutely works so well. Let's take a look at the next one in here as we move to the industrial sector, XLI. Of course, industrial is not in great shape either. 51% have a directional bias in there that is negative, 46% neutral, and only 3% positive. Let's just filter here on the long term right there, and you can see the Boeing, of course, under huge pressure. American Airlines, because nobody's going to travel. Alaska Air, these are all really negative. Got a few neutral ones that you can see showing up in there. And if I come down over here, there is absolutely nothing that looks very positive when I look at this. It's all just really negative. Let's move over from the industrials, XLI, and go down to the technology stocks, XLK. Of course, some of the technology stocks haven't been that bad, but look at this. 37% negative, 60% neutral, only 3% positive. Pretty hard to find anything that's very positive in there. As I scan on here, what about on the short term? Anything positive on short term? Well, I don't really see much in there. I'm just going to scroll all the way down here. Nothing positive on the short term at all. Let's try look over here and long term only, and we'll see that long term it's 24% positive, 51% negative. These all look really pretty bad when you look at that. XLI, whoops, we got a little update there. Let's get off of that and come right in here into the we did technology. Let's skip consumer discretionary. I did financials right over there when I talked about the XLF. Well, look at here, 55% are negative, 45% neutral, and 0% positive in the financials. This group is in terrible shape, and as I said, it is very likely to continue weighing on the stock market. Very bearish to neutral. There's a slightly bearish one, and really when I'm just going to scan on here, you can see Aflac all red across, AIG all red across, AMG, all of this stuff. Of course, you could look at this if you have this particular tool. It's just absolutely fantastic. Let's just look at the materials right in here, and you can see that, well, materials are 67% negative and only 4% positive. Well, what could possibly be positive in there? How about Newmont Mining? Very bullish. Green all the way across. Very strong positive conditions suggest minor declines and higher prices. And if you look at it, you could see how positive it is. And you can see in here all of the stocks in here that are either slightly bearish or very bearish in the materials category. And if you're an investor, you would be able to sidestep the decline that's going on right now. So this is a look at me just doing some analysis in here using this absolutely amazing thing. You could just go back to single symbol mode in here and, put in anything you want. You want to see IBM? Well, there's IBM, and IBM is not coming up. I don't know what's the matter with that. Okay, well, for some reason, it just jammed up. But, there it is. I had it up there. Sorry. So there's IBM. You could see it's neutral right there. Let's take a look at NVIDIA, which everybody loves, right? Everybody loves NVIDIA. And look at that. It's still bullish. Short term has neutralized, but these are still pretty powerful. Just wanted to give you a good peek at the Slimulator Momentum Tracker and give you a good sense for the conditions of these groups. Of course, if you want to have the Slimulator Momentum Tracker, it's just a level 1 membership, and all for the next month you could try it for just $11.50, and it's included in all levels. So give it a try. Become a AskSlim member, and I think you will love that incredible tool, and we keep adding and improving on that all the time. Nobody's got anything like in that. All of our built-in algorithms in there, and you can have it for practically nothing. That's it, and now we're going to look at our short-term view for the coming week. So I'm going to give myself about a 70-75% last week. The only thing I was pretty perfect on was the S&P 500. We had revised our upside during the week, and it came up and tagged our number exactly. We thought it would continue moving to the downside. There was no dip in the bond market. We expected some little dip, but higher. The dollar market, there was no bounce. We thought it would bounce a little and then move down. We thought it was in big trouble. The gold market stronger than we expected. We thought that it would test 1575 and then move up. Well, it did not test that number, but it did move up. So in the energy market, well, way weaker than we expected it to be, as we thought it would fall only to we thought it would rally to 47.50 and then move down again. We thought that the intermediate set a bottom soon, but that rallies would continue to fail, and boy, did they ever. So let's take a look. We're going to move out of this horrible HYG that you see there, and we're going to move into /CL as we do our short-term view for the coming week. So I promise you it's coming. /CL. Okay, so now we're going to come into the daily chart right over here and blow that up for you to see. Now, the intermediate is bottoming soon, and this extended a little bit out. We shifted this out a little bit more in here as it's now testing and getting below that low. We're expecting a rebound in here, but that the rebound is still going to struggle. These resistances are declining, so we're going to look for an upward move to about $45 in there, and outside maybe 47.50 in a next number of weeks, we would say, as it begins to try to form bottom in here. Maybe OPEC will do something, or Russia get in line, but we're looking for a bottom to form in here, and we think it's going to be an up week, and we're really talking about the next 1 to 3 weeks, which is trying to get up and then failing in that resistance and then moving down again. Momentum is negative. You see it tried to stabilize right in here in this lower sell zone, but then turn negative again, and it remains negative. We think an attempted rally up to that area of about 45, but then not being able to do a whole lot better than that. Some of the evidence is a bottom is coming pretty soon, but rebounds are destined to fail. Now we'll take a look at the gold market /GC. And there it is right there. And gold, we have moved our targets up right now to 1725, 1735. This bottom came pretty much on time. You can see that gold major pattern coming down, and then the rally right in here. Momentum has remained strong right there. You can see the slim ribbon. If you don't have the slim ribbon on your charts, you really should, because this is the best momentum indicator there is, in my opinion. And you can see here it turns positive at this point right around 1480, and then it rallied all the way to 1691 and remains positive in this dip. It's likely to continue to move up into that direction. We're going to call for, in this strong momentum period, it getting up to 17.25. If it got under here, 1563, you know that there is a deflation or flight to cash going on that is incredible. So if you lose this upward momentum and get down to that level, well, there's going to be collapse going on everywhere. So we think that the print mode that the Fed is in, QE coming, and I showed an amazing chart in our big picture analysis that you have to see that shows all the Fed actions, the relationship between gold and the dollar over these last couple of decades. You're just going to love that chart when you look at it. So gold, we're going to look for it to move up past that 1700 area up to that 17.25, 1735 over the next couple of weeks. Some of the evidence is that we're likely to get continued intermediate positive action in here before a correction sets in, and then we have been calling for a correction in the metals into May, which we think will set up much higher prices later in the year in the metals. Switch over now to $DXY. And you can see here, as that does not come up, $DXY. A total breakdown, a total collapse. On our intermediate charts, we have major top listed in there. We have an amazing thing going on. You can see the beautiful cyclic action right in here, right, the low right in here, the low do right in here, and no rally. It's the cycle basically is going invisible or doubled up, and you can see it pointing down in this way. When it got underneath this level, we told our members a configuration warning, which says major top very likely. It puts the intermediate pattern in a major top. You had this big VTL breakdown right over here. You have momentum now turning negative. This is incredible. I mean, what we're calling for the next week is lower. We're looking for potentially down to 95.10 right over here over the next week. If it tries to rally, we think it's going to keep going down. Interest rates are converging between the U.S. and everywhere else. And if money was going to the U.S., it is now going out of the U.S. And it deserves to go out of the U.S. because the Fed is absolutely killing us with their stupidity. I'm never going to let go of that because it's unbelievable that we have these 12 men running our economy and just don't know how to just let us have a real organic economy that can settle out and everybody can trust. They won't give us that. And probably never will until there's a chaotic condition. Maybe we're getting into that right now. That is the dollar in huge shape. We're going to call for it to be lower, negative momentum, and maybe getting down to that 95.10 in the next few weeks. Some of the evidence is low yields and printing are going to keep the dollar under huge pressure. Take a look here at the ZBs, /ZBs. Man, do we have an unbelievable thing going on here with the 1.27 yields. Look at that move in here. It's incredible. Here's where the momentum turned positive, right over here. So we were at 157.12. Look at the slim ribbon calling this. The buy signal here. There's actually a buy signal right over here. Momentum super strong. Gets up to 180.19. It's unbelievable. 1.27 on this 10-year yield. And we're going to look for it to peak in here. Chop around. Maybe some wide chop. Maybe get down over here to about 175 over the next 2 to 3 weeks. And then moving up again. Wide chop, wide range. Some of the evidence just says that the conditions are such that we're in a panic mode and we're likely to see very, very wide swings in here. The yields are so low at this point that I don't see the 30-year getting down to 1. Well, who even knows under these conditions, because our Fed could drive interest rates to 0. So we're just going to look for big swings, as you can see, and maybe have a range in here of down to about 175, maybe up to 181 and 182, and be in that wide range, wide chop. So now we're going to switch over and look at the stock market. The stock market, of course, has been just a wild place. I mean, if you remember the movie Rollerball, well, you know what I'm talking about. We used to yell that on the floor when things got pretty crazy. Rollerball! That's the kind of markets that we have right now. If you don't know what that movie is, go take a peek at it and you'll get an idea how this is a rollerball market. 1,000-point swings on the Dow, 100-point moves in the ES just regularly. And this is the kind of market that is massive opportunity for traders or massive trouble. And sadly, getting emails from some people that are struggling in kind of a big way. So this is a crazy market. Let's take a look here. This is the S&P 500 as I switch over from the bonds to SPX. Here is your SPX crash, essentially, that's gone on. 17% off the top, the biggest six-day decline off of the top ever, and that made a 20-day low. We talked about that last week. Let me just move that thing out of the way so that you can see that a little bit better right there. Okay, so we have a 20-day low you can see right in here. That came pretty much on time. 20 days off of this low, which was 20 days, off of this low, which was 20 days, off of this low, which was 22 days, off of this low, which was 21 days. You can see the cyclic movement in here very clearly. We looked for a short-term bottom in here, but you only got a 2-day, 3-day rally, and now you're moving down again. Look for wide chop in here is what we see. Some of the evidence is that the intermediate is bottoming along with the short term in here, but it's not likely to give you much on the upside. It's amazing. I'm telling you that there's bottoming going on when it's going down like the way it is. Of course, we had these huge swings and a very, very small change for the week. And we could get another week of that wide chop going on here. 200-point range in the S&P is easy. 3065 is probably where it stops up here. If it gets under this level here at around 2865, 2862, it's going to be in free fall. There's going to be selling coming out of the woodwork in panic. We're going to kind of look for it to chop around and make somewhat lower lows here out into the next, towards the end of March, then try to rally again. There is free fall potential during this time period. So we'll look for wide chop, wide range, momentum negative, as you could see right over here, and continuing. This is actually a sell signal that is occurring here today. So that's a warning that it's not going to be able to hold rallies on the upside. And you can see, notice the buy signal right in here, buy signal here, buy signal here, up, 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 positive momentum, and then all of a sudden sell signals coming in line right over here, negative momentum. The market is in trouble. Intermediate pattern should be giving you a little bit of a bottom in here and then trying to rally again. But in this kind of a market, you're not really sure. We're going to say that we think that this last low from last week down over here at around 28.55 is going to hold, and we're going to try to rally again in here. But we're looking for this wide range, 28.60, 30.65, fighting against this negative momentum, intermediate momentum, facing to the downside again. Some of the evidence is that we're going to try to bottom in here on intermediate patterns, but below 28.55, big trouble. Wide swings, problem market, extremely low interest rates, the Fed messing everything up over these 11 years. And this is what we have, a market where they absolutely cannot control what's going on, and they're going to try. QE4, if they're going to call it, is coming. More interest rates cuts are coming, and it's only because things are so rough in here. Yeah, you could blame the coronavirus as doing it, but was only the trigger to put us in a crisis condition that the Fed should have been prepared for, that they could do their job and deal with a crisis position, and maybe then they'd be cutting rates from 5% or 4%, but not cutting rates from 2% or 1.25% and now going to zero. Well, they have messed this up in one very, very big way, and that sadly is the condition that we're in right now. We're going to see markets move in this massive volatility. We talked about this period being a period of huge volatility coming up. It's moved up exactly at the time we said, and that's where we are right now. Look for more major volatility and more very significant damage. Hopefully we get some good news on the coronavirus. I think if we get a rally under those conditions, it is doomed. That is it. That is Market Week. I want you to be so careful. It is so dangerous out there. And we're always wishing you great trading.